Using multiple timeframes is a cornerstone of all trading and investing. And in this video on MT4, using the VRSI indicator, the volume relative strength indicator, the principles are exactly the same. So whether we're using our volume price analysis methodology or whether we're using an indicator such as the VRSI, the principle is still precisely the same where we use multiple time frames. And in this example, very short example, I've just selected four. I've got the 1 minute, the 5 minute, the 15 minute, and the hourly. And we're on the NASDAQ 100 on the MT4 platform. And again, the principles that I've explained in the introductory videos and the other videos in this series really are highlighted here. And what we see is what we're looking for is the extent of the pressure in the trend. Is the pressure good in the trend? Are we seeing high pressure bars on our VRSI indicator? Are we seeing that diminish? Are we seeing trends where the strength of that trend has diminished completely, has died away? We have small bars, we have a changing color, perhaps we're changing from bearish to bullish or bullish to bearish. And it is all governed by those three simple principles that I've tried to highlight throughout this series of videos, which are essentially the fulcrum, the midpoint, where we see the price sentiment change from one side to the other. Secondly, the color of the bars, whether we are seeing brighter colors for strong pressure, weaker colors for a weakening in pressure. And thirdly, the height of those bars. Are we seeing strength in that trend? Are we seeing pressure building in that trend? Are we seeing rising pressure with rising volume bars? That's what we want to see all the time. And you've got some very nice examples here which show you how we interpret it across the time frames. Clearly on the 1 minute, we see it at the coal face, at the live edge of the market, very close to the price action. Then we step back a little bit on our 5 minute and we see a different perspective. Then we drop down to our 15 minute, which gives us a further perspective. And ultimately we go out to our hourly chart, which gives us a much longer term perspective on where we are. Because remember, what we're seeing on a 1 minute trade is nothing more, nothing less than a minor reversal on a longer term trend. So what we're seeing on a 1 minute chart or a 5 minute chart are the intraday price oscillations that a slower term trend trader or swing trader has little or no interest in. To them, it is just a minor oscillation on their longer term perspective, whereas to us as intraday scalping traders, it's very meaningful and gives us the ability to trade on very fast time frame charts. So I leave you with that thought. That's the 4 time frames. Using multiple time frames is essential, and you apply it to indicators in precisely the same way and interpret them in exactly the same way as I've demonstrated over the earlier videos. So I hope you enjoyed these examples. Thanks for watching. See you soon, and bye for now.